Hi guys, so in this video, we'll be starting with the double tops and double bottoms. All right, so this video is going to really talk about a lot of things, right? So the purpose of this video is to show the flaws, the false expectations, and then the um possible solutions to those flaws, right? It's not just to the purpose of this video is not trying to say that one strategy is superior over the other. No. So just want to say, okay, these are the things that are wrong with these retail trading strategies, and this is the solution to it, right? So there's no point identifying a problem when you can't give a solution, right? So we're going to give the solutions on how you can improve on it, right? So once again, the purpose of this video is not to say that this is better than the other or this is not better than the other. No, totally not. Right. So I know many people watching this. That is why I want to make it this way so that anyone that is watching the videos can actually gain something, right? So let's begin. So we're going to talk about some double tops and bottoms. So that's what we're going to begin with. Double tops and bottoms, like the pitfalls of double tops and bottoms, right? So let's begin. Now, as you guys already know, a double top is a retail trading pattern where you're expecting the market to form a kind of M pattern or a W pattern. And that is basically what a W is. So you're looking at an M, a W pattern or an M. So that is basically what you're looking at when you're trading a double top or a bottom. So you're looking for a W or an M, right? So what do I mean? Now, a double top or double bottom trader is looking for the market to do something like this, reject. So when the market rejects, the double top trader or the pattern trader is expecting this point to act as what? A kind of resistance level, right? Looking for the market to form a resistance, right? So that because the market dropped heavily from here, they'll be like, okay, this is a resistance level, right? So they now put probably their sell limit. Some of them they put their sell limit directly there. They put their sell limit there, and stop loss will be maybe some pips above that double top, right? And then they're expecting the market to do what? Market to come to that point and then sell off, right? Now, this is what a classic double top trader is expecting, right? This is what a double top trader is expecting. He expects the market to come to that previous area of rejection before rejecting and then selling down. That's why I call it an M pattern. Then, for someone that is bullish, the person is looking for what? A W, right? When market comes, let me just take it to this side, right? So when the market comes to the bottom or the support level, right, and rejects. So a classic pattern trader is looking at this as what? A support level. So if this is support level, let's simply do what? Draw out a line, okay, support level, right? And then what are they expecting? They're the market to buy. So there are two ways they do it. Some of them look for some kind of rejection before buying, while some they will just enter with a limit. So even if you're using a limit or you're waiting for a candlestick pattern, because some people use candlestick patterns, right? They wait for a candlestick pattern, maybe an engulfing candle, a pin bar, a doji, a shooting star, a dragonfly, all those things, right? So there's certain market to come to that double bottom area and then do what? Buy off, right? Right. This is what a double bottom trader is expecting. So this is the whole logic behind double top and double bottoms. It's a pattern, right? They have been taught to follow in the market. Once they see the market giving that double top or giving that double bottom, they are looking at taking the trade, a buy and a sell. Now, this is the whole idea, right? So I have to explain it for you guys that maybe are new to this, right? This is basically what you are taught in the books, right? If you go to popular trading channels, the gurus always show this. They'll be like, okay, if the market rejects once, you can buy. You can buy and put your stop loss below this high, or maybe some of them will say you should put your stop loss like 10 pips below in case of manipulation, all of those things, right? So that is how basically what they do. Now, let's talk about the flaws. Now, the flaws of this particular trading approach is that number one, they are trading without logic. Right? So these are the flaws. There's no logic, right? Number one, there's no logic, right? There's no logic in this. Logic simply means there's no reason behind it, right? They just trade it based on pattern sake. Okay, now let's assume that maybe on the fundamental basis, right? Maybe on the fundamental basis now, the dollar is supporting the market to drop, right? Maybe we have let us do a little assumption now. Let's assume that this is a pair like GBP USD, right? This is a pair like GBP USD, and then we have a bear, we have a bullish dollar news, right? We have a bullish dollar news, right? Or fundamental, or yeah, a bullish, let's just say a bullish dollar, um, a bullish dollar, right? Let's leave that. So dollar is bullish now. This GPUSD chart, right? Let us do this analogy. Now, this GPUSD and dollar is bullish. Now, when dollar is bullish, GPUSD is supposed to what? It's supposed to sell. Now, the people that trade with patterns, right, that have no logic behind their trades, they're just trading because of just patterns. They will be looking to do what? To buy this because what? Of the pattern. So they trade for pattern's sake and no logic. They're not looking at the fundamental aspect. They're not looking at the trend. They're not looking at any of all these things. They don't have any logic. So they're just trading buy. That's all they're doing. Just buy. Because what they saw at M, they saw this sharp rejection and then the market to do what? To buy, to reject off. Now, when you trade that way, you are neglecting logic. So now, if the dollar is bullish, that simply means that GBP should do what? Should go down because they are what? Inversely correlated. So dollar and GBP are inversely correlated. So they have what? An inverse correlation. All right, follow me. Follow me. So they have an inverse correlation, meaning that they don't have an inverse relationship, right? So they have an inverse correlation. And that means if GBP USD is up, that means dollar should go what? Down, right? They don't go in the same direction. You cannot see GBP USD buying when dollar is buying, right? They go opposite direction, right? So now, if you have the GPS is going up and dollar is going down, this is how they are. But now you're having a bullish dollar, that means GPU should go down. If dollar is going up, GPS should go down. But people that trade without logic, they will just look to buy, and when they buy, this is what happens. The market does what? It drops off, like drops. In fact, it drops off and maybe does something like this, come and retest, and then just keep dropping. Why? It's just keep dropping. Why? Because there's no logic. Why? That's the first reason why many retail traders that trade just double tops and bottoms lose a lot of money, because they don't add logic to their trade, right? Now, the second reason why they lose money is because they don't consider the trend, right? They don't consider the trend, right? They don't consider trend, right? So they don't consider the trend, right? They don't consider the trend. So, this is one of the major pitfalls of retail traders, right? Or, this retail concept. They don't consider the trend. If the market is bullish, they're trying to catch the top by a double top, right? And you know that now, all of you know that whenever the market is, sorry, you guys all know that whenever the market is bullish, what do you expect? The market should do what? Make higher highs and higher lows, higher highs and higher lows. This is how a bullish market looks like, right? But now, when these guys that do double top try to trade, they're not considering the trend. They're trying to do what? They want to sell this double top, takes them out. They try to sell another one, it still does not take them out. And this continues happening on repeat. Because why? They are not considering the trend, right? They're not considering the trend. You try to buy, you take a loss. You try to buy again, you take a loss. That is one of the flaws of trading double tops and double bottoms. They are not considering the trend. And when the market is bullish, it makes new highs. If a double top holds, it simply means that there is a reversal. Double tops only hold during reversals, right? That's the only time that double top hold, only during reversals, right? Meaning the market is bullish now, and the market just wants to reverse, and then drops off. Right? That's why it's only when it happens. But if the trend wants to prevail, you will never see a double top holding. the market will keep taking out double tops because what? Of the trend of the market, right? That is major reason why there is a lot of losing majority with the retail concept, right? So now, as you can see these things I'm giving you, already having an idea of the solution, which I'll be giving very soon. I'll just give 3 flaws. Now, the third flaws is that um, the the retail concept is a trap, right? It is a trap for is a trap set by institutional by big funds, right? I also leave it like that. So there are big funds that trade the market, right? They actually use this trap. Whenever you're in the market, right, you make money when someone else is selling, right? If you buy and no one else is selling, you won't make money. The market is balanced when there's equal buys and sells, right? As people are buying, some people are selling. That's what makes the market to move, right? That's what the market. Okay, that's what makes the market efficient, right? The market is efficient when they are equal participants from opposite directions. You're having buys, you're having sells. That's what makes the market what efficient. Now, when everyone is buying, the market does not efficient, right? So the big traders need that efficiency for them to be able to enter their trade. So if they are buying and no one is selling, they can't be able to scale in their position. So the big funds, the smart money folks, they are looking at this as a trap. So they the market moves based on others. Now, if a smart or a big fund wants to take a trade and he knows that everyone wants to sell this double top, right? Everyone is looking at selling this double top, right? So now he has what? Opposing liquidity to his trade. So what does he do? He deliberately does what? He buys with his big fund. If you are in a trade now, right? If maybe there are 100 retail traders, right? There are 100 traders and their total lot is what? They have maybe total lot of what? Let's say 1 lot per person. They have a total of 100 lots, right? They are 100 with 100 lots. And then one big fund, right? One big organization, one big fund can drop as much as 500 lots or 400 lots, right? So if we're in a trade now and people with 100 lot are what on a sell, right? If people 100 lot on a sell and the people with 400 lot are on a buy, right? What do you think will happen? The market is going to do what? It's going to buy because the people that are buying have more position or more money, right, than those that are what selling. So one big fund has enough money to take out what all the retail traders. So now they are seeing this trap and they want you to take the trade and lose your money so they can make money from you. So what do? They will deliberate, since you're selling here at the double top, what are they going to do? They're going to do what? They're going to do what? Buy against you and take you out. So once they buy against you, they have taken you out and then they cannot do whatever they want. They can choose to continue the market or they can choose to do what? To drop the market down. So it's up to them. They can choose to continue buying or they can choose to sell it after they have bought from you. So that is why these concepts are flawed, right? Notice what I say. I didn't say it does not work. I said they have flaws. Everything that has flaw also works, right? For instance, now, um, we have a player like, let's say, a football player, right? I don't want to mention anybody's name because this is a YouTube video, right? So you have a football player, maybe he's a top, maybe a goal scorer. There's no way you can see a football player that does not have a flaw. Maybe he's not that fast, or maybe he gets tired quickly, or maybe he does not score much goals in the second half, or maybe he does not know how to give good passes. There must always be a flaw in a team, but it does not mean that thing does not work, right? That is what I'm trying to say here. These things work, but there are certain flaws which make people to lose money. There's no point trading a strategy that gives you what 9 losses out of 10 or 8 losses out of 10. It doesn't make any sense. You take 10 trades and then you lose 8. It doesn't make any sense. You take 10 trades, you lose 8 and win 2. Right? You lose 8 and then win 2. Right. So now, what most of these gurus do is that out of the 2 wins, they will magnify those 2 wins. All they be showing on their courses is that okay, this is how to win. Right? They will only show you the wins. That's what most of these gurus do. They'll focus on that win, just that one win, and that is all. They are focused on just that one win, that one win, that one win. They're not really focused on, okay, you took 100 losses. They won't talk about that. The only thing they're focused on is that single win that they had, right? So that is what many gurus do. But I am not here to um to play with them or to abide by those rules. I'm not to tell you this is why this doesn't work, and this is how you can improve on it. So if you win 8 and lose 2, there's no point. If you lose 8 and win 2, there's no point. But what most gurus do is that they focus on these 2 wins. So all their videos will be on these 2 wins. They won't talk about the 8 losses until you buy their course. Once you buy their course, then you will see that it does not happen that way. Now, what are the solutions to this? How can you solve this problem? How can you solve this problem? So the solutions to this I'll be giving. If you're a double top trader or a pattern trader that use double tops, this is a solution I'm going to give to you. Number one solution is that always consider the trend, right? Consider the trend of the market. So if the market is bullish, don't try to buy double tops in a bullish market. So even if you must trade double tops, this is how you should do it. Now, if you must trade double tops, let's be like this, market is heavy bullish. So the market is heavy bullish, and then maybe have maybe something like this kind of stuff, right? This kind of double bottom. Right? I don't want to double bottom, but you can look at something like this. Why? Because the market is bullish, right? The market is bullish. So this is how you should take your trades. If you want to take double tops, then you should be taking it in line with the trend, right? It's not that you're trying to catch a counter trend movement. If you must trade double tops, then let it be in line with the trend, right? The market is making high, maybe see a high broken, and you cannot take a double top and then you move higher. Right? These are the kind of double tops you can take if, sorry, double bottom you can take if you want to really take those kind of trades, right? It has to be in line with the trend. The market is bullish. Look for buys. Look for buys below and then take it to the high. Why don't we tend to do the opposite of the trend? Now, another solution to taking with double tops and bottoms is number two. Always wait for what we call liquidity sweep. Right? Wait for market to sweep liquidity. What do I mean? So always wait for liquidity sweep before entering your trade. Right? So wait for liquidity sweep. This is one of the ways you can higher your odds if you take double top bottom trades. Right? Wait for liquidity sweep. What do I mean? When you have a double bottom, right? Wait for the market to sweep that liquidity before buying, right? Because the bank is targeting that. So now remember that number one, it must be in line with the trend. And number two, you now wait to what? Your liquidity sweep. So now you have your liquidity sweep down here, right? Market sweep liquidity, and then you can now look for buys below this low, right? You're bullish. Remember, the market is bullish, right? The market is bullish. Don't forget that. The market is bullish, right? You don't wait for what? A liquidity sweep before doing what? Taking your buys. That's what I'm trying to say. Wait for market to catch the liquidity sweep, and then you cannot take your buy below that liquidity sweep. Right? And if you're to take your trade this way, your stop loss will obviously be below the liquidity sweep. So if you're buying this, right? Maybe if you buy below this low, your stop loss will be what? Below that, that's liquidity sweep low, right? Maybe somewhere around there. Then you cannot look for a buy, maybe take it up. Right? You're supposed to be below that low, and then you take it up. That's how to take it on. So you can wait for maybe candlestick pattern, a break of structure, below here, you can wait for what you call a break of structure. Market gives you what? A break of structure, right? Market gives you what? That break of structure below that low. You can wait for this to occur inside there. This break of structure, right? Market will give you that break of structure below that low. And then you look for your buys, right? You can wait for break of structure, you can wait for candlestick pattern, you can wait for rejection candles, anything you use for confirmation. So you can wait for that below that low. That is what you can do. So that is basically what you should do, right? You should always wait for trend, and then you must always consider what we call time-based liquidity, right? I'll be not talking much about this. So consider what we call time-based liquidity, right? Something like so something like previous weekly highs. I won't talk much about this, right? As we continue, I'll throw more light on this. This is a whole series. I won't really talk about number three because it's very advanced, right? It's mostly for intraday traders. If you're not intraday, you won't really understand this. But if you can focus on just these first two things, the trend and the wait for liquidity sweep, then you're going to avoid a lot of things. And then number four, I want to also state that if you must take the bottoms and bottoms, then you must always consider the logic behind the trade, right? Consider the logic, okay, why should this market buy, right? Consider the logic behind the move, right? Consider the logic behind the move. So if the market wants to buy now, why should it buy? What is the dollar index saying? What is the news report saying? What is the fundamental report saying? What is the sentiment? What is the seasonality? So you have to always consider seasonality, consider the trend, all those logics. I won't go much into that because these are things that will really take a lot of time. Talking about seasonality alone is going to really take a lot of time. Let me just list them out so you can go and do your research. So you can look at seasonality. I look at what the correlative aspects, the correlative standpoint. Certain things you can look at the logic, correlative standpoint, right? You can look at what these fundamentals. What's the news saying, right? What are the banks saying? What are the presidents or the governors of reserve saying, right? What are those things, right? Seasonality, correlative standpoint, fundamentals, all of those things, right? You have to look at all these things, and then you also have to look at what we call the sentiment. What are the sentiments that you just add? What is JP Morgan saying? Are you trying to buy this? Are you trying to sell that? So you have to always look at the logic behind the move. Right? The purpose of this video is not to delve into all this, so you can do your own research. But these are the things I want you guys to do. So now let's just look at the rig chart. Let me just illustrate some points here. Right? Let's just look at some rig charts here. Now, sorry. All right. Now, can you see what I'm talking about now? Watch this. This is a 30-minute chart. All right. This is 30-minute chart. Now, can you see what I'm talking about? So look at this. So now, this market was heavy bearish here. This is just a little snippet. You have to do your studies on this. Now, watch this. The market is what has been bearish from this end. Like market has been bearish all through here. But imagine that you are taking double bottoms. You have gotten your first loss here. That's the first bottom, first loss. That's the first loss. You try again to buy this. So what? Another bottom here. Market even gave a little rejection. What happened? Drop down. Okay, you see no problem. You want to take another double bottom. What do you see? Loss. Okay, no problem. You try to take this one again. What do you see? You push it up. This is the only one that happened. Watch this one. Watch this. This failed. This failed. This failed. And then this one bought a bit. So you can see that we have lost first trade, second trade, third trade, fourth trade. This is the one that actually played out. Okay, now let's assume, okay, you won that trade, right? Then you now said, okay, you want to take another one. So you draw this in time, double bottom, loss. That's a loss. You try, maybe if you try this one, maybe I've got a win here. Right? Maybe this one, maybe I've gotten a win here. Maybe this one played out. Okay. Oh, it didn't play, it took it out. So it took out that low by a little fraction, right? So now you now say, okay, double top. If you want to draw a line, okay, double top, what happened there? You draw a double top here, what happened? Loss. You try another double top here. What happened? What happened there? Loss. You try another double top here. See this one. See it. Loss. Right? But watch this. This was the only one that helped. So out of this example, now let us just judge this math. Let's judge the math. Okay, now out of these examples now, what do you have here? This failed. Let me mark that one that first failed. Just give you guys a logic. So you guys understand what I'm talking about, right? So also look at another one here. See, if you drew as a double top, that was also a loss. Look at that. That was also a loss, right? Loss. So loss 1, loss 2, loss 3, loss 4, loss 5, loss 6, loss 7, and loss 8. Why your wins were only, I've lost 8 trades already. So in this whole chart, I've lost 8 trades, and then the win was just 1. This was the only win. This one here, 1. I think 2. So only 2 wins I can see here. This extreme one here. So this one here, which was a win, 1, and then 2. So you lost 8 trades and 1, 2 because of what? Flawed logic. I can even see more losses that occurred here. Look at this as well. See? I see. Loss. So now, can you see what I'm talking about? Why you don't have to trade these things for pattern's sake. Now, let's assume that you put those things I talk about. Okay, now, let's assume that you were considering the trend and you're waiting for liquidity sweep. So now, the market is bearish now. and you're waiting for liquidity sweep, right? Now remember, I've given you the solution. Market is bearish, wait for liquidity sweep. Now, market was bearish here, so now you had what? Your double top here, right? And then you waited for liquidity sweep. So if you have a liquidity sweep here, you can see this liquidity sweep here, this push up. You have won this trade, beautiful. Remember, you're following the trend. Now you have another you have another level here. You wait for what? Liquidity sweep by this candle. So look at this candle liquidity sweep here. So let me just be drawing it out. So this is liquidity sweep here, right? And then a drop. Then look at another liquidity sweep here. Watch this. This candle gave a liquidity sweep, sweeping that top, and then what? It drops. So if you voted for this, you would have gotten a big good sell on this. Now let's look at another example. You have seen 2 wins already. Now see another one, double top here. Right? See this double top here. What do you see? Liquidity sweep, and then what? It dropped down. So you're saying you have won 3 trades already. Watch this, watch this, watch this. Just following. Remember, you're following the trend. You're watching the trend before you do anything. You're watching the trend. Now, another top here. See there. Another top. Look at this. Another top. Liquidity sweep, and then you sold there, and then what? It dropped down. So you can see how this thing is playing out nice. When you are considering the trend and you're waiting for the liquidity sweep, you have more chances of having wins than losses. Right? You are having more wins than losses. Look at another one here. The market wanted to buy. See liquidity sweep here. You bought below there. Beautiful. So that one here. Watch this. This candle swap liquidity before them was buying. Can you see that? Right? So I think this was one of the places where double top held nicely. This one held nicely, right? This one held. I don't know which one held, right? But I think it's still coming in the future. So you can see how this thing span out, right? This is how this thing span out. Whenever you're bearish, wait for that liquidity sweep before taking your sells, right? Look at this. Take a look at this. Can you see this liquidity sweep here? Olympus is a line to draw it so you can see. Can you see this liquidity sweep? Although it didn't sweep this one, but if you try this one, they have obviously lost this. And you can see that liquidity sweep below this low here. You can see that sweep, right? Before what? They buy. You can see this as well. You can see this double bottom that was forming here, swept, and then what? A buy. So what am I saying? Very simple idea. If you're looking for a double bottom and you're bullish, remember the trend must be bullish. Wait for the market to take out liquidity before you buy, and then you take it up, right? Wait for the market to sweep liquidity before you buy. If you're selling, what the market to do what? To do what? To take out what? Liquidity before you drop. Right? So that is basically what I'm talking about, right? So I hope this video was insightful. That I'm going to talk about other concepts as we continue. It's going to be in a different playlist, and I would love to see you guys in the next video. So if you love this video, do want to like this video, subscribe to my YouTube channel, and share the link with your friends. Right? So see you guys in the next episode of this video.